What's up, traders? This is Ferris with Trade with Tex, and today we're going to be recapping the Fed announcement on Wednesday, and I'm going to show you how you can trade these Fed announcements like a pro with just 3 very simple methods. Okay. Now, for some of you guys, you probably caught the webinar in the actual Trade with Tex chat. This is a simplified version of that and a more summarized version of that. So these tips will help you. They helped me. And again, I made a pile of cash on Wednesday, but I could have tripled that had I used these a little bit more effectively. So even if you made money on the Fed announcement, let me show you how you could have made more. Now, first things first, we're just going to go off of a basic S&P 500 chart using futures on the 5-minute time frame, and we'll shuffle between the 5 and the 15. So those of you that are using larger or lower time frames, just adjust them for the sake of this webinar so that you can understand these educational concepts. So first things first, the number one thing when it comes to Fed announcements is understanding the time. And this is a very general thing, so I'm sure a lot of you guys are already aware of this. Time of day is extremely important for trading. That's why most experienced traders just wake up, trade the first 2 hours, and then they come back the last hour and a half, because that's when volume comes in. So if you think about a Fed announcement, whether or not it's an unstable economy, whether or not Powell is just firing up the money printers, it doesn't matter. The times are still the most important aspect of this, because 2 p.m. Eastern time is when we first get the initial move, right? 2:30 is actually the most important time. I don't know why there's so much pressure on 2 p.m., but 2:30 is the most important one because that's when Powell starts speaking, and that's normally when things start to get a little bit shaky, okay? And then finally, the last time is 3:10, 3:15. Normally that's when he gets off the microphone and wraps up the press conference. All of these different times act as inflection points, right? Which are a basic way of saying that is essentially just different times of where we can get decisive action that could also result in a reversal, right? So if you think about the Fed announcement trading dates, what's the toughest part? The head fakes, right? And if you just simplify that, avoiding getting caught in head fakes comes down to waiting for volume and price to line up, not just price, right? So that's where the times come in, and not having FOMO. Both of those aspects are checked off by simply saying, oh, well, I missed the 2 p.m. move. I still got 2:30 and 3:10, okay? And you can wait for the volume to start coming in and then trade the move. And I'll give you a super simple strategy here, right? Very simple. If you just use one moving average, right, whether it's an 8 EMA, that's typically what I use, a 9 SMA, whatever your moving average is that you're charting with, I have a couple, but that's the base one. So if price crosses above or below that, you have a trend shift, right? Simple enough. And you can see it here on the 5-minute. Initially, we had the move down. Let's say you missed that, right? Let's say you're human and you don't trade every single move. Even on round 2, we would be waiting for 2:30. And as soon as we see any significant strength above the 8 EMA or below the low for that matter, right? Because that would be a trend continuation. So above this little pink line right here or below the low, that would result in decisive movement, and you can just immediately take the trade. So in this instance for the S&P, this is where I knocked out my first big trade. I was going with the NASDAQ, right, with futures, and I had some S&P calls as well. It's because we crossed above this moving average and this recent high. And then we punched it and went straight back up to the VWAP. Now, whether or not you have an understanding of all these moving averages, all these indicators, it doesn't really matter. I tried to pull up a simple chart so that I could just get the point across. Trend shift, right? And that's marked by the time. We waited for 2:30. As soon as we saw it pushing, we went long. Okay. Now for the NASDAQ, again, that was my first big trade. To put it into perspective, that was $2,000 right off the bat, right? Could have been a lot more had I played round 2 all the way up here, but I only caught part of the move. And that's what really brings in my second point here. It's not just times, but it's also confirmation. We just need to wait for confirmation. And specifically, the best opportunities that you're gonna get are off of larger time frames. So we've been looking at the 5-minute, but if we zoom this out to the 15, right? This is number 2 on the list. So number 1 was times, number 2 is time frames, specifically larger ones. If we zoom it out to the 15-minute, not only does this generate new trade ideas, but it also tells us when we're going to get bigger moves, right? For example, this was the initial drop off at 2 p.m. look at the candlestick that printed just above support, right? Giving us a little hint that we are defending this area. Even though it's short term, we still have a shot at a bounce, right? So by waiting for certain 15-minute candlestick formations, which is advanced, I understand, but candlesticks, are just supply and demand. If you trade on a lower time frame, larger time frames should still be easier. So if you wait for these formations to form, you can see right here and right here, specifically both of these are telling us that we're not following through to the downside yet. We're not following through to the upside yet. We're going to get a move in the other direction. Okay. And based off the key levels that we got 38.43 here as the big support and 39.02 as the big resistance. You can see that this candle closed back below resistance, right? This candle closed back above support. So all we need after that is just an intraday buy or sell signal, but that alone is enough to start getting ready to take the trade, right? Start getting ready to execute on the lower time frame. So by this line of logic, as soon as we get this candlestick formation, we're ready to go long on a break above that high, right? As soon as we get this candlestick formation, we're ready to go short on a break below that low. Okay. Now, if you look at the bigger moves from the Federal Reserve announcement, this was the decisive one. And it all started with this guy, recognizing that the 15-minute is struggling and that the S&P is probably not going to follow through to the upside, and then waiting for that continued weakness to short it back down. Now, it also allows for some repeat trades, because for me, if I see the 15-minute closing lower and I'm playing a downward trend, I can just keep taking that same trade over and over and over. So it also keeps you out of the wrong side of the trade, because I'm not buying this dip here knowing that the 15-minute is closing lower. And if you look at our key levels, this right here, 38.43, we close this candle below it at the end of the day, which there's still 15 minutes until the close to make money. That's a lot for day traders. It's plenty of time. And if you put this into perspective, that's still another, 20 points on the S&P? That's a big move. That is a big, big move. So Federal Reserve announcement dates, it's not about being a hero. It's not about showing Powell who's boss. It's about waiting for confirmation and then taking the trade idea immediately, not hesitating, not second guessing yourself, capitalizing on that. The only other thing I want to add to this, other than using certain times and certain time frames, is waiting for consecutive candles. Okay, this can be used on the 5-minute time frame. It can be used on any lower time frame, really. But if you think about this, this was the first candle where we started to see weakness. So if we wanted to play a short, we would have to see consecutive 5-minute candles either below the trend support or below the key level. I'll say that one more time. If we want to play short, we're on the 15-minute, so we're going to switch it back to the 5. But if we want to play that short, we have to wait for consecutive 5-minute candles below the key level or below the trend support. If we look at the key level here, 39.02, this was a red candle, this was a red candle, but technically we did not close two below it until these two. That's where you start taking the short, okay? Same goes for the repeat, just based off the trend analysis here. This is the 5-minute 8 EMA. So when we close two candles below it, 1, 2, that's when you take the repeat short again. And you can keep going with this move again as long as the 15-minute keeps closing red. You keep watching on the short side. Nice and simple. It keeps you out of the bear traps and it helps you catch a bigger move. So 3 things again. Number 1, times. Wait for 2, 2:30, 3:10-ish. Number 2, larger time frames, right? Using the 15 to generate trade ideas, or if you want to be super patient and catch the bigger move altogether, use the hourly, right? You'll have to wait and you might miss a move, but you're going to catch a big one if it sets up. And then the last one was just waiting for consecutive candles. So 2 green, 2 red in a row, whichever direction it's pulling, right? That's what we want to play, because that shows decisive action and we don't have to sit in that trade going, ooh, am I right? Am I wrong? Should I take the other side? That's nonsense. That's fugazi, it's fugazi, it's nothing. So in this case for the S&P, we had confirmation here for this move back up based on the 15 and the 5. And then on the move down, we had confirmation 1, 2, 3 for, honestly 3 or 4 big shorts at the end of the day. And again, for me, I caught this move a little bit more and a lot of this downside afterwards. I missed a good chunk of this downside, and I could have done better if I just used that larger time frame and waited for consecutive candles. So I hope you guys learned something. I hope you made some notes as to what could help you bank on these more volatile trading days. Remember, not every day is the same, so you got to write these things down and actually apply them to your trading strategy. But either way, thanks for watching. Like the video, subscribe to the channel if you enjoyed, and I will catch you next time.